Okay, so good morning again, everyone. So, for today, we will be discussing a new topic. Still, we are um, in liabilities, but now um, our topic will cover more on the formal type of liabilities, which is basically itong bonds payable. Okay, so before that, I hope na everything is okay with you, ha. Um, Although nasa pandemic pa rin tayo ngayon, but I hope na kinakaya pa rin natin yung situation, no? Um, Matatapos rin ito, no? Matatapos rin ito. Let's just hope and pray na sana malapit na. Okay? So, okay. Bonds payable. Okay. So, in general, okay, when we talk about debt, there are two types of debt. Diba? In general, there are two types of debt. These are the informal type of debts and the formal type of debts. Okay. So, when we say informal type of debts, okay, when we say the informal types, these are the type of debts wherein, kumbaga, um, these are um, supported by verbal manifestations only. Meaning, yung nag-uusap lang kayo, then, pag na-obtain na yung consent, is that the creditor ngayon, magbibigay na ng pera sa'yo, ikaw as debtor, makaka-receive ka na ng pera through verbal manifestations only. This type of debts, itong mga informal, okay, itong mga informal, are usually involves only small sum of money. Yung parang nangingiram ka lang ng konting pera, di ba? So, those are informal type of debts. Now, formal types of debts on the other hand, is that ito yung mga klase ng debt na basically ang involved na dito is yung medyo malalaki na yung mga amount. Okay? Medyo yung malalaki ng amount. And this usually is supported by a legal document na. Okay? Which this legal document is necessary for the creditor to enforce payment per agreement sa utang. Okay? So, kumbaga, mayroon ng formal document na sinusuportahan yung contract nyo, yung debt contract, para si creditor ngayon is safe na mapa-enforce talaga niya yung payment sa'yo na nangungutang. Okay? So, in general, there are three types, or there are three common types of formal debt. Now, we have the mortgages, we have the notes, and we have the bonds. Okay? Mortgages, these are the type of debts wherein ikaw na nangungutang is nire-required ka na ng security of the loan. Okay? Security for the loan. Security in the form of real properties, okay, or movable asset. Okay? Real properties in the sense na nare-require ka na ng security or collateral na lupa or building. Okay? Those are real properties. Okay? When it comes to mortgages, if yung security required is a real property, ang tawag sa mortgage natin dyan is itong REM, R-E-M, or a real estate mortgage. Okay? Or a real estate mortgage. Pagdating naman sa movable asset, ito yung ng collateral in the form of a movable asset like cars, equipment, machineries, which is high value. Okay, which are high value. So, ang tawag sa mortgage na ang collateral is a movable asset, ito yung tinatawag natin na mga chattel mortgage. Okay, ito yung mga tinatawag natin na chattel mortgage. So again, ang purpose lang nito why you are required for why you are required for a security of the loan is basically to add security na mapapa-enforce talaga ni creditor yung utang mo. Okay, yung utang mo na dapat mo siyang bayaran within the agreed term. Okay, within the agreed term. Okay? Itong mga notes naman, basically, these are the type of informal debt which is supported by a promissory note. Okay? Which is supported by a promissory note. Si debtor, ngayon, mag-i-execute, okay, mag-i-execute ng promise to pay note na the debtor is promising to pay a certain amount of money in this certain time, in a certain period with a corresponding certain interest. Okay? Ito yung mga notes or mga note payable supported by a formal promise to pay. Okay? Now, what is happening right now? Okay, what is happening right now is that usually, especially if you borrow money from a bank or a financial institution, and especially if it involves large sum of money na millions of pesos, you will be required to execute a mortgage and a note. So, kumbaga, you will execute a note, a promissory note, and you will also execute a mortgage, which basically you are required to offer a certain property, be it a movable asset or a real property as collateral for the debt or for the loan. Okay, for the loan. Okay. So the third type is itong bonds. Okay, is itong bonds. So ano bang pinagkakaiba ng bonds, mortgage at notes? Okay. Now, most of the time, if yung financing requirement, okay, if financing requirement of a certain individual, certain entity, certain corporation is that kaya lang i-cope ng financial institution or certain banks, sufficient na itong notes and mortgage. However, there are certain financing requirements wherein its amount is so material that financial institution or institutions cannot cope with that requirement. No? Ito yung mga situation wherein ang isang entity na kailangan na ng mga billions of dollar loan, okay, which is so high na hindi nakayanin ng mga financial institution kahit pa magsama sila through a syndicated loan. Okay, through syndicated loan. So, the point is, one of the recourse of that entity, of that corporation, is to issue bonds. Okay, is to issue bonds. So, mangyayari ngayon sa setup ng bonds issuance is that yung debtor, okay, which is the entity or the corporation needing a financing requirement is mag-outsource siya ngayon ng pera, okay, ng kapital from the general public. Okay? So, ang mangyayari ngayon is that si general public ngayon, siya yung magiging creditor, investor. Okay, creditor, investor. Si debtor, siya yung magiging, or yung corporation, siya yung magiging, yung entity, siya yung magiging debtor, issuer of the bonds. Okay? So, kumbaga, in substance, yung pera na gagamitin ngayon ni entity as debtor, issuer of the bonds, is manggagaling siya, would come from the pool of funds, okay, from the pool of funds of the general public as investor. Okay? Kasi yun nga, ang concept is, kung hindi kakayanin ng bangko, kakayanin yan ng public, basta i-pool lang ng public ang available nila na pera. Okay? So that is a bond issue. So yung concept is, in essence, parang um, naglalabas ngayon or nagbebenta si entity ng stocks sa general public. Si public is parang nag-i-invest ng stocks. Although, yung ini-invest niya is not to own a capital or an equity kasi nga hindi siya stocks, but rather magbibigay siya ngayon ng pera para utangin ni debtor. Okay? Na ang income ni general public ngayon is through receiving interest income, which in general is much higher than if the general public would deposit that cash in the bank. Kasi yun na, let's say, if a corporation debtor ngayon, mag-issue siya ng bonds na, let's say, would earn an interest of 8% per annum. Okay? 8% per annum is much higher than if the general public would deposit that cash in the bank, which I think ngayon is earning just or is just earning, I think 0.02%. Diba? Yung mga savings account. So, medyo maliit talaga. Diba? Kung i-deposit lang nila sa bangko. So, ako ngayon, kung ako yung investor, yung general public, I would rather put my money sa bonds kasi yun nga, it would earn much higher interest rather than depositing it in the bank. So, that is the concept of a bond issue. Okay? Debtor, the corporation, the entity is the issuer, general public is the investor, the creditor. Okay? So, there are many types of bonds. Okay? There are many types of bonds. But, let us just focus on these types, which is, ito yung medyo importante sa atin muna ngayon na dapat maintindihan because dito parang umiikot yung mga accounting problems na isa-solve natin and most likely lalabas sa board exam, no? So, one type of bond is itong tinatawag natin na term bond. Okay? So, a term bond is a type of bond issue wherein there is a single maturity date. Okay? There is a single maturity date for principal. Okay? So, para mas madali natin maintindihan, a term bond is ito yung klase ng mga bond na baga, yung principal is one-time payment only. Babayaran mo siya on the maturity date of the bond, one time only. So, kumbaga, if there is a bond issue, let's say 5 million, and the term is 3 years, After 3 years, babayaran mo in full, one time only, yung 5 million. Single maturity date. Okay? Then we have also a serial bond. Okay? Itong mga serial bond, in essence, okay, multiple, multiple maturity yung principal. So, kumbaga, para mas madali nating maintindihan, yung principal is to be paid in installment. So, let's say, like in the example, so, kung may bond issue na 5 million, tapos, 5 years yung term, then you are required to pay 1 million annually, then that type of bond is a serial bond. Okay, that type of bond is a serial bond. Okay? Another type of bond, another type of bond is itong tinatawag natin ng mga convertible bonds. Okay? Itong convertible bonds, okay, these are the type of bonds na kung intindihin natin, hybrid siya in the sense na this is basically a hybrid of a debt instrument and also an equity instrument. Okay? A hybrid of debt and equity instrument. Why? Although in form, debt siya, because yun nga, bonds siya in form. However, at a certain point in time, during the term, or within the term, pwede mo siyang ma-convert into equity. Na, instead of babayaran ka ngayon ni issuer, is that at the end of the term or within the term, okay, it will be converted into shares of stocks. So that is why a general description ito is hybrid debt and equity instrument. Okay, convertible bonds. Okay. Another type of bonds, okay, is itong tinatawag natin na callable bonds. Okay, ano tong callable bonds? These are the type of bonds na, okay, these are the type of bonds na per agreement, okay, per agreement is that within the term, okay, within the term, pwede siyang i-call, okay, i-call for payment ng issuer. Okay? Pwede siya i-call for payment na hindi pa siya, kumbaga, hindi pa dumadating yung maturity date niya. That is why it is callable. Call or call for payment. No? Na pwedeng babayaran na siya within the term kahit hindi pa dumadating yung maturity date. Ito yung callable bonds. Okay? So, doon muna tayo magpo-focus sa apat na klase kasi actually there are many types of bonds pero doon tayo sa apat kasi yun nga yung apat na yun yung medyo common na may encounter natin when we are still at the stage na iniintindi pa natin yung basic ng bonds payable. Okay? So, in a bond issue, meron din tayong in a bond, meron din tayong tinatawag na mga special feature specifying kung ano talaga yung mga special characteristic ng isang bond. Okay? Ng isang bond. Bakit medyo special to other type of liability? Okay? So number one, a bond basically has a bond indenture, okay, or a deed of trust. So, a bond indenture, kumbaga, ito yung contract ng issuer and the investor. Na dito mo makikita yung lahat ng details ng bond issue. Okay? Dito sa bond indenture, details which the issuer and the investor has agreed. Okay? Has agreed para sa bond issue. Okay? So, another special feature of a bond, okay, another special feature of a bond is that a bond has a bond certificate. Okay? A bond has a bond certificate. So meaning, like a stock, like if we issue shares, okay, shares of stocks. A bond also is supported by a bond certificate. Wherein dito makikita sa bond certificate yung denomination unit ng isang bond issue. So, the concept is like in stocks wherein a stock is basically divided into its par unit, par value unit. The bond is also divided into its basic nomination unit. So, for example, one basic denomination unit ng bond, let's say, ang amount niyan, ang face amount niyan, which is equivalent kung sa stocks pa, ang par value is 1,000. Okay? Then, meron tayong issue ng bonds, let's say, amounting to 100 million. Okay? Amounting to 100 million. Then, there is an available bond certificate which is computed as the amount of the total amount of the issue, which is 100 million, divided by the face amount of 1,000. We have a total certificate of 100,000 bond certificate. Okay? So, yan yung concept ng bond certificate. Okay? Basic denomination unit. So, also, in the bond certificate, dito mo makikita yung stated interest rate. Okay? Stated interest rate or yung tinatawag natin na nominal rate. So, itong interest rate na makikita mo sa bond certificate is ito yung agreed interest rate na dapat bayaran ni issuer regularly. So, let's say, a bond issue is has an 8% per annum interest to be paid semi-annually, okay? Every January 1 and July 1. So, itong 8% interest per annum, makikita yan siya dito sa bond certificate. Ito yung amount of interest na babayaran ni issuer regularly, which is ito yung nominal rate. Okay? Ito yung nominal rate. Also, in a bond certificate, dito mo rin makikita, okay, yung bond date or yung date of the bond. Okay? So, ano tong date of the bond? Okay, bond date. In essence, itong bond date, okay, dito i-start, okay, mag-start, mag-accrue. Number one, yung term or yung bond term. At number two, dito mag-start, mag-accrue yung interest. So, kumbaga, if a bond issue will state na yung bond is dated, okay, yung bond is dated, let's say, January 1, 2020, and the term is 3 years. So, that means na yung bond date mo is January 1, 2020. Kasi dito nga magsa-start, mag-accrue yung term. And yung interest mo, magsa-start na rin siya mag-accrue on January 1, 2020. Okay? We have to especially take note on this because, okay, there are certain issuances, wherein yung bond date mo, okay, kung ano yung date nakalagay sa bond certificate is hindi siya pareho sa issuance date mo. And we can do that. Okay, we can do that. Kumbaga, i-issue mo yung bonds, okay, beyond the date of the bond. Okay? Ito yung kumbaga, ito yung concept na nangyayari if we are to issue a bond in between interest date. Okay? We are to issue a bond in between interest date. Hindi tayo pinagbabawalan dyan, no? Pwede yan siya. Basta the point is, what is important is that if the bond certificate states na babayaran mo siya within 3 years, dapat babayaran mo siya after 3 years from the bond date, not with the issuance date. Okay, not with the issuance date. Ang common lang talaga nito, bakit why we are taking special consideration this is that generally dapat issuance date is equivalent to bond date. Okay, issuance date is equivalent to bond date. However, there are certain issuances wherein the bond date, okay, the bond date is earlier, okay, is earlier than the issuance date. Okay, so remember that concept because later on we will encounter that as we move forward with our discussion. Okay, so another special feature of a bond issue is that, okay, a bond can be issued, okay, a bond can be issued with a premium or discount. Okay, with a premium or discount. So, ang concept lang yan, when we talk about a bond can be issued with a premium or a discount, is that a bond can be issued, okay, equivalent to its face amount or what is the amount stated in the bond certificate, or it can also be issued, okay, it can be also be issued higher than the face amount or lower than the face amount. So the point is, if a bond is issued higher than the face amount, higher than what is stated in the bond certificate, then that bond is issued with a premium. Vice versa, if the bond is issued lower than the face amount, then that bond is issued with a discount. Okay? Now, why this concept is very important? Because yun nga, no? Let us remember na if we issue a bond, okay, if we issue a bond, we are trying to get investors. No? We are trying to get investors so that parang win-win siya, kumbaga, na in the sense na makakakuha tayo ng funding, okay? Kakakuha tayo ng funding in regard to our specified projects costing material amount in peso, and on the aspect or in the side of the investor, they would gain income. Okay, they would gain income. So that is why, okay, sometimes we issue bonds at a premium, okay, or sometimes we issue bond at a discount, no? Now, ang premium of bonds, usually makaka-issue tayo ng premium if, okay, if yung present situation ng market ngayon economically is that kumbaga yung existing market rate, okay, yung existing market rate which is existing available market rate ngayon is lower than our stated rate. Kumbaga, the investor would be willing to pay us, okay, would be willing to pay us higher interest, or sorry, the investors is willing to invest with us, the issuer, with a lower interest rate, okay, with a lower interest rate rather than the effective rate floating in the market. Okay, that is premium, no? We would receive higher amount, okay, we would receive higher amount than the face amount. Okay, discount on the other hand is that discount is the effective market rate floating, okay, the effective rate floating in the market is higher than our, okay, is higher than our nominal rate, okay, is higher than our nominal rate. So kumbaga, we would be receiving lower amount, okay, we would be receiving lower amount than the face amount. So the concept is pag discount, because we want to get the funding, okay, because we want to get the funding, okay, we are willing to receive lesser than the face amount, kasi yun nga, yung effective market rate na nagpo-float ngayon outside sa atin is much higher. So kumbaga, para mas enticing sa investor na instead of investing their amount outside sa atin, kasi yun nga, yung market rate outside from us is much higher than our nominal rate, we will be willing to receive lower, okay, we will be willing to receive lower para makuha lang natin sila na mag-invest sa ating bonds. Okay? That is discount. Now, in a premium, okay, in a premium, the floating rate, the effective floating rate na available sa market is much lower than what we are giving sa per nominal interest rate. So the point is, kung ako yung investor, okay, if I am the creditor investor, instead of investing my money in the existing market which has a lower effective rate than what I am willing to give, or than what a certain entity, corporation is willing to give through bonds, then ako na investor ngayon is I would rather invest in that bond. Okay? Kasi yun nga, mas malaki yung nominal rate na binibigay nila. Si investor entity ngayon is that, kasi yun nga, alam niya na regardless of the funding requirement, alam niya na ang general public investor is maraming mag-i-invest sa kanya kasi yun nga, mas malaki yung ino-offer niya na interest rate. So, kumbaga, mas pamamahalin pa niya yung bonds niya. That is why he is willing to receive higher amount than the face. Because yun nga, yung existing floating rate sa market ngayon is much lower than what he is giving through his nominal rate. Okay? So, nakuha yung concept. So, in that sense, if we are to summarize that, in a premium transaction, or in a bond premium transaction, is that the nominal rate or the stated rate, is higher than the effective rate in the market pag premium. Kasi yun nga, maliit yung effective rate, kaya willing yung mga investor na mag-invest sa atin kasi mas malaki yung binibigay natin na rate. Dahil mas maraming gusto mag-invest sa atin, okay, tendency is yung issuer ng bonds, okay, yung debtor is, kumbaga, mas pamamahalin pa niya, okay, yung issuer ng bonds. Kaya mayroong premium. Okay? Nominal is higher, greater than effective. Sa discount, naman, nominal rate, is lower than the effective rate in the market. Kaya ang concept is, kaya nag-o-offer tayo ng discount kasi yun nga, kung hindi tayo mag-o-offer ng discount, walang mag-i-invest sa atin which would compromise our funding requirement. Kasi nga, yung effective rate floating in the market is much higher than what we are giving as regular interest payment or yung nominal rate natin. So, para mas makakuha tayo ng investor, we need to offer the bonds at a lower price discount. Sa premium, para kumbaga, kasi nga, mas malaki yung interest na ino-offer natin kaysa rate na nagpo-float sa market, we have the leisure to price our bonds at a higher amount than the face amount. Kasi despite of that, alam natin na maraming mag-i-invest kasi nga malaki yung interest na binibigay natin. Kaya we are issuing bonds at a premium. Okay? So that is the concept of premium and discount, no? So please take note of that because later on we would still dig deeper on how to treat premium and discount in accounting. Yeah? And the concept of nominal rate higher or lower than the effective rate is very important for us kasi yun nga, this will affect our computation on the issue price of bond. Okay? So another special feature of a bond, okay? Well, wait. Let us go back first now. Let's go back. Now, if we issue a bond at a premium or discount, okay? At a premium or discount, any premium or discount, okay? Remember this, any premium or discount is not to be treated as a gain or loss. Although, when it comes to premium, parang may gain tayo, or when it comes to discount, parang may loss tayo, this is not treated as a gain or loss on our part. But rather, okay, as an addition, okay, or deduction to our interest expense. Okay? That is why, if we are to be asked, okay, saan dapat i-base, okay, saan i-base ang totoong interest expense when it comes to bonds payable, especially in the case wherein there is premium or discount, okay? The answer would be the interest is based on effective rate. Okay? Kasi nga, if you may remember our earlier discussions that the pricing of the bond would be basically affected by the effective rate, which is it would cost any premium or discount. Okay, it would cost any premium or discount. In that sense, a premium is not to be treated as a gain. A discount is not to be treated as a loss. But rather, it is an addition when it comes to premium. An addition when it comes to discount, an additional interest expense, or a deduction to our interest expense when it comes to premium. Okay? When it comes to premium. Okay. So, next special feature of a bond issue is itong tinatawag natin na bond issue cost. Okay? Bond issue cost. So, what is a bond issue cost? Okay? A bond issue cost, ang other term nito is yung tinatawag natin na transaction cost. So, meaning, a bond issue cost is generally all the directly attributable costs related to the bond issue. Meaning, ito yung mga expenses na dapat natin ma-incur para ma-perfect yung bond issuance. Okay? Para ma-perfect yung bond issuance. Ito yung mga bond issue costs. Example, like itong mga underwriter fee, legal fees, accounting fee. Okay? Ito yung mga bond issue costs. Now, a bond issue cost is important to note because in general, ang treatment nito is dependent on how we are to present the bond issue. Okay? Why? Now, because in general, when we talk about bonds payable or bond issue, it can be presented, in the financial statement in two ways. Per Philippine Financial Reporting Standards 9 requirement or PFRS 9 under financial instruments requirement. No? There are two ways on how we can present a bond payable. Okay? This type of financial liability. Number one is itong tinatawag natin na fair value option. Okay? Value. Okay? To be presented siya initially at its fair value and subsequently at its fair value also, with changes in the fair market value. Okay, with changes in the fair market value presented. Okay, initially presented siya or recorded at fair value. Okay, initially presented at fair value and subsequently, okay, at amortized cost. Okay, so again, there are two types on how we could present bonds, okay, which basically will affect the treatment of bond issue cost. Okay, number one is itong change. Okay, that change is to be reported, okay, to be reported sa profit and loss statement. The other type of how we present a bond is that initially at fair value din siya, however, subsequently at amortized cost. Okay? So, what is its relation sa bond issue cost? Now, if that bond, okay, if a certain bond issue is yung tinatawag natin na covered siya sa fair value option, okay, covered siya sa fair value option, the bond issue cost, okay, is to be treated as an outright expense. Okay? Meaning, regular expense siya. It cannot affect the transaction price or the issue price of the bond. Okay? Remember that, ha? However, okay, if the bond is to be presented, okay, at amortized cost, okay, at amortized cost, a bond issue cost, okay, a bond issue cost is to be deducted sa issue price or to be deducted sa bond issue price. Meaning, ang effect niyan, if it is to be deducted sa bond issue price natin, a bond issue cost can, okay, can increase the discount or it can decrease the premium. That is why most of the books, okay, is telling us about dito na if there is a bond issue cost and that bond is presented at amortized cost, the bond issue cost is lump, okay, is lump added sa discount or netted, deducted sa premium. Because, in essence, a bond issue cost is deducted sa bond issue price. Okay? It's deducted sa bond issue price. Okay? So, remember all those concepts, ha? Because later on, we will encounter that once we do our exercises. Okay? So, another special feature of a bond issue is itong interest on bonds. Although na-discuss natin ito earlier, ibabalik lang natin ng konti, ha? Okay. So, again, the concept of interest on bonds. Okay? Now, di ba nga, as stated, the interest noted on the face of the bond, ito yung tinatawag natin na nominal rate or nominal interest rate. Okay? Ito yung binabayad sa atin, binabayad regularly ng issuer ng bonds. Okay? Ito yung binabayad regularly ng issuer ng bonds. Okay? However, kasi nga, because of the concept na nag-i-issue tayo ng bonds with a premium or with a discount, okay? With a premium or discount, most of the time, itong nominal is not our actual interest expense. Okay? Kumbaga, because of the premium or the discount, the nominal rate stated in the face of the bond is not basically the basis of the actual interest expense. Okay? It is the basis on what amount is paid as interest. But in substance, it is not the basis for the actual interest. Why? Kasi nga, meron tayong premium or discount which is affected by, ano ngayon nakaka-apekto? Effective interest rate. So, kumbaga, if itatanong nga sa atin, ano ba ang basis ng actual interest expense? The answer is not nominal rate, but rather the effective interest rate. Okay? So, klaro yun siya, ha? Now, so, that is the special features of a bond, now, which is very important, okay? Which is very important for us to understand the concept of bonds, and also very important when we do our accounting transaction related to bonds, no? In addition pala, when it comes to interest, no, needless to say, if there are no premium or discount, say if there are premium, our nominal rate, okay, if there are no premium or discount, our nominal rate basically is equal to our effective rate. Okay? So, klaro siya. So, if there are no premium or discount or bond issue costs, okay, the nominal rate is equivalent to our effective rate. Okay? So, So, now, next. Let us now go, okay, on accounting for bonds. Okay, accounting for bonds. So the issue in on how do we account for bonds is number one, how do we measure bonds? Okay, how do we measure bonds? Now, um, there are two in in a bond. Okay, so in measuring a bond, okay, in measuring a bond, um, we are to consider two recognition period. So the first recognition period is the period for initial recognition, and the second period is the period for subsequent recognition. Okay, so on initial recognition, okay, on initial recognition, okay, um, again, regardless if the bond is to be presented at fair value option or at amortized cost, on initial recognition, okay, the bond is presented at fair value, okay, at fair value. Klaro yun siya. Regardless the fair value of siya or recorded, which at the date is equivalent, okay, price the present value, present value by the, so recorded at fair share issue, which the date of issue was equivalent to your issue price or the present value of the bond. Okay. Now, if on initial recognition, okay, if on initial recognition, especially if there is a bond issue cost, okay, if there is a bond issue cost, um, again, as stated earlier, the bond issue cost, okay, is deducted to your issue price, okay, is deducted to your issue price, or kumbaga, an addition to your discount or a deduction to your premium, lump or netted deduction to your issue price. That is per requirement, or okay, that is a requirement per PFRS 9, no? If, okay, if again the bond is to be presented at amortized cost, okay? If fair value option, okay, if fair value option, the bond issue cost is an outright expense. Okay? It's an outright expense. Okay. So, okay. So, one of the most common problems na ma-encounter natin pagdating sa bonds, okay, is basically the question on what is the market price of the bond or issue price, especially if it is not stated. Okay, especially if it is not stated. Now, if the issue price is stated, okay, if the issue price is stated, okay, if the issue price is stated, it is usually in the form of a percentage figure. So meaning, most of the time makaka-encounter ka if the price of the bond is stated. Let's say a certain bond is issued at a premium. So the issue price basically, for example, will be stated in this figure or in the figure, okay, 105, 101, or let's say at a discount, 98, no? That basically means na if ito yung binigay sa atin na figure, this is synonymous to percentage. Okay? This is synonymous with a percentage figure. So, kung baga, if yung face amount ng bond, let's say, is meron tayong 1 million, then it was issued at a premium for 105. Okay? The face amount is simply to be multiplied by 105%. So that is, if 105 siya, the issue price is to be computed as 1 million times 105%. So, the issue price is the issue price ngayon is 1,050,000. Okay? That is if it is stated. Okay? Now, if the issue price is not stated, ito siya ngayon yung medyo komplikado. Okay? If the issue price is not stated, medyo komplikado siya. Why? Because again, we need to compute for the issue price. Okay? So, if you may remember with our earlier discussion, issue price is equivalent to the fair value on the date of issue or the net or the present value on issue date. So, to compute for the issue price, okay, we need to compute for the present value. Okay? So, because yun nga, issue price is equivalent to the present value of the bonds on the date of issue. Okay? On the date of issue. So, in computing for the present value, okay, we need to consider the effective rate. Okay, remember that, we need to consider the effective rate and not the nominal rate, the effective rate, which on the date of issue, to determine the present value, we need to consider present value factors. Okay, we need to consider present value factors that we will use as a multiplier. Okay, as a multiplier to get the present value of the bond. Okay, to get the present value of the bond. Then, the present value factor is based not on nominal rate but rather on effective rate. Okay? Effective rate. So, in essence, present value of bond okay, of the bond is basically computed as present value of principal, okay, present value of principal plus the present value of interest, okay. So that will be your present value of bond or the issue price, okay, or the fair value on the date of issue. Now, that is basically the general formula, no? Now, um, to get your present value of principal, okay, to get your present value of principal, um, the formula is principal payment or principal multiplied by present value of 1, okay, present value of 1 using the effective rate, okay. If the bond, okay, if the bond is a term bond, okay, remember the concept, term bond, if there is only one time payment, okay, there is one time payment only. So again, if it is a term bond, the formula for the present value of principal is the principal payment or face amount multiplied by the present value of 1 using the effective rate, okay. While the present value, okay, while the present value of interest, okay, while the present value of interest, that is computed as annual, okay, or not, the correct term is not annual but rather regular interest, okay, multiplied by present value of an ordinary annuity of 1 for n periods using, okay, for n periods using your effective rate, okay. So the difference is that sa principal, present value of 1 yung gagamitin natin in computing for the factor. For interest, it is now ordinary annuity for n periods, okay, using the effective rate, okay. Remember that kan ha? Remember that concept. So pag term bond siya, so ba well, present value factors class, okay, value factors is that actually meron namang statistical table nito wherein I don't know if you are familiar with this, no, if you are familiar with your statistics, no, meron ng pre-established, no, predetermined na mga na present factors statistics siya. However, one of is dapat matutunan natin is that when should we use a present value of 1 or when should we use a present value of an ordinary annuity, no? Before we will try to compute everything, we should first understand when should we use present value of 1 or when should we use present value of an ordinary annuity, no? Because those two concepts are different. Okay? So, ganito. Present value of one factors. Okay? Present value of one factors. These are used. Okay? These are used if the expected cash flow, okay? If the expected cash flow is number one, or basically these are used basically if the expected cash flow with their inflow or outflow, okay, with their inflow or outflow is non-uniform, meaning yung amount niya is hindi pare-pareho. That is why we will use present value of one factor. That is why, in computing for the present value of the bond, especially pagdating sa present value ng principal, yung ginagamit talaga natin is present value of 1. Why? Because for 1, if it is a term bond, okay, hindi talaga siya uniform because there is only one time payment. Meaning, kumbaga, paano mo siya makukumpare na uniform siya kung isa lang yung payment? Diba? We can only consider a uniform payment if there are multiple payments, meaning uniform yung multiple payments. Okay? That is why the exact term to be used kung kailan natin gagamitin yung present value point factor is that if there are non-uniform multiple payment or if there are one payment only, or not necessarily payment because yun nga cash flow siya whether inflow or outflow. Kumbaga, non-uniform multiple cash flow, okay, cash flow is the right term, okay, non-uniform multiple cash flow, or there is one time cash flow whether inflow or outflow, okay, one time cash flow. So that is present value of one, no, factor. So in the case of the principal, especially the term bond, kasi yun nga, one time cash flow siya, we will use present value of one factor for n period using the effective rate. Now, we will use, okay, present value of an ordinary annuity, okay, present value of an ordinary annuity if there are multiple, okay, multiple uniform cash flow. So meaning, maraming cash flow, pare-pareho yung amount. We will use present value of an ordinary annuity. Okay? So at least now you now know when should we use present value of 1 and when should we use present value of an ordinary annuity. Okay? And by the way, class, before pala we're talking about all these factors, dapat maintindihan din natin yung concept ng present value, di ba? Which I know na somehow meron na kayong idea on what is a present value, no? To reiterate lang, no? To refresh your memory, di ba? The concept of present value is that because nga this cash flow that we are expecting, no, in the case of the bond, um, we are the issuer, the cash flow that we are expecting to pay, kasi nga, in the future pa siya, after the term or on the maturity date, okay, its value now, okay, its value now is basically not what is stated in the agreement or in the contract, because yun nga, let's say example, uh, we are to pay 3 million after 3 years, okay, we are to pay 3 million after 3 years, and we are in 2020, so basically we are expected to pay 3 million in 2023. Because of the concept of present value, itong 3 million mo in 2023 is not 3 million now in 2020. Okay? Why? Because of time value of money. Okay? Because of time value of money. Yun nga, in the case of bond, okay, in the case of bond, if there is a stated issue price or there is a stated fair value, then medyo hindi komplikado yung uh, accounting treatment natin, because yun nga, in essence, the issue price or the fair value in general is equivalent to the present value of the bond. Maging komplikado lang siya if the fair value or the issue price is not stated. Why? Because yun nga, the face amount that we will pay after or on the maturity date, okay, is not its value today because of time value of money. Okay, because of time value of money. Again, no? Time value of money would differentiate or would vary from time to time because of economic factors like inflation, di ba? One of the major cause why time value of money is no? So that is the concept of value. Okay, that is the concept of present value. Now, going back to our discussion. So, to compute to the present value or the issue price, no, we need to consider the present value of the bond. So again, present value of the bond is computed as present value of principal plus present value of interest payment. If the bond is classified as a term bond, okay, is classified as a term bond. Now, if the bond, okay, if the bond is a serial bond, meaning is a serial bond, meaning principal is to be paid annually, hindi siya one time. Okay? The present value of the bond, okay, is computed as the present value of the total annual, or sorry, not the more precise term is not annual, because yun nga, meron kasing payment na pwedeng semi-annual, quarterly, or annual. So the more precise is total regular payment, no? The present value of the total regular payment. So yan yung basically the present value of the bond if it is a serial bond. Wherein the present value of the total regular payment, okay, the present value of the total regular payment is computed as the regular principal payment, okay, the regular principal payment plus the regular interest payment, okay, regular principal plus regular interest payment, kasi nga total regular payment, multiplied by present value of 1 for n periods using your effective rate. Okay? So, again, regular principal payment plus regular interest payment, okay, multiplied by present value of 1 for n periods using the effective rate now. Present value of 1 yung gagamitin, where in fact, okay, multiple cash flow na dito kasi yun nga, serial bond siya. Okay? Bakit kaya? Well, the answer is, when we talk about serial bond kasi, okay, when we talk about serial bond, because annually there is payment, okay, because annually there is payment on principal and that interest in general is based on a standing balance, okay, interest is based on a standing balance. The regular interest payment is basically not uniform, while the principal is uniform in the sense na i-divide lang naman yan siya sa term, yung principal payment. The interest is not uniform because the outstanding balance is affected by principal payment, which interest is based on outstanding balance. Diba? Interest is based on outstanding balance. So the point is, regularly, hindi uniform yung payment. So, the point is, yung gagamitin natin na present value factor is not ordinary annuity, but rather present value of 1 because the concept of non-uniform multiple payments. Okay? Non-uniform multiple payments. So, yun. Okay? So, that is for serial bonds. Anyway, we will have a practice problem nito. You don't worry kung medyo komplikado pa sa inyo yung concept. So the point is, alam natin yung paano siya kukunin, no? Yung issue price. Okay. So, now, the next thing, okay, the next thing that we should know, okay, although as stated earlier, itong mga present value factor is that merong statistical table na given na nito, and also sometimes if we are to solve problems related to bonds, is that given na siya sa problem, there are instances wherein hindi siya binibigay ng problem and that we need to consider, okay, we need to know how to compute for it manually na. Okay lang sana yun nga kung meron ng table and that given sa problem, but the point is sometimes hindi ito binibigay, so we need to know how to compute it manually. Okay lang din sana if we have a financial calculator, which is yung financial calculator is a special type of calculator na hindi siya scientific pero more on focus siya kumbaga sa statistical computation, which is yun nga, hindi siya masyadong common na calculator, so we have no choice but to know how to compute present value factors using an ordinary calculator. Okay, so we have this example. Okay, we have this example, no, for us to know how to compute present value factor. Okay, so an example for this is that we have now a bond payable, which is a term bond. Okay, which is a term bond, which is a term bond. Okay, ang effective rate, which is ito yung basis natin for present value factor daw, is 6%. Then yung interest payment or yung regular payment natin is annual. Then yung term is 5 years. So, yung first question is, or how do we compute manually daw, no? So these are the steps, no? We have steps given to compute manual present value factors, or to compute manually present value factors using an ordinary calculator, no? So the first step, okay, the first step is that we have, okay, we have to, okay, we have to input the rate, the effective rate plus 1. So the point is, if that is the case, no, effective rate plus 1, so in our given illustration, 6% yung effective rate, then annual siya, that is 1.06. Okay, that is 1.06. Now, the first procedure is to press the division side twice. So divide, that is twice. Then press equal sign, equal. So now, in this step, now there are certain manual calculator na diretso na to decimal, or like in this case, nag-1 siya. Okay? So the point is, after pressing the division sign, then pressing the equal sign, we will now start to press repeatedly the equal sign based on the number of period, which in this case, because annual siya, then 5 years ang term natin, the number of periods na makaka-receive or na magbabayad tayo ng interest, or the end period, is 5. Okay, the end period is 5. So in this case, yung pag-press natin ng equal sign is based on the end period. It is equivalent to 5 presses, no? It is equivalent to 5 presses. So, but the counting should start na pag yung first input or yung value is nasa decimal point na, which in this case, kasi 1 siya, hindi pa to start ng count. Ito yung start ng counting. So that is 1 period. Okay? Second period, third period, fourth period, and fifth period. Which is ito yung the value na ma-determine natin dito, which is this is, diba, if we round this at 3 decimal point, 0.747. Okay? Ito yung present value of 1. Okay, nakuha. So again, let us repeat the process. Input 1 plus the effective rate. Division sign twice. 1. Okay. Press the equal sign based on the end periods, which is hindi siya magsa-start pag 1 pa yung answer but through the decimal. So, per requirement, 5 periods siya. So, 1, 2, 3, 4, 5. So, that is your present value of 1. Itong 0.747. Present value factor of 1. Okay? Now, the present value of an ordinary annuity is ganito. Once you have determined your present value of 1, if we are to determine na ngayon the present value of ordinary annuity, just continue the process now. Now, the next step is we have to deduct 1. Okay, minus 1. So that is 0.0252 and so on now. Notice na negative siya kasi yun nga, nag-minus 1 tayo. Either we can continue the process or tanggalin lang natin yung negative sign. Depende. Same lang din naman yung resulta niya. So let's just remove the negative sign. No? Let us negate the negative sign. Okay. Then after deducting 1, divide by the effective rate, which in this case is 6%, diba? So 0.06. So the answer of 4.212, that is your present value of ordinary annuity, okay, for 5 periods, okay, for 5 periods at 6%. Kuha, madali lang, di ba? While your present value of 1 for 5 periods, kasi nga annual siya, at 6%, okay, that is 0.747. So again, let us repeat para mas klaro. Okay? 1.06 divide 1, 2, 3, 4, 5. That is your present value of 1 for 5 periods at 6%, 0.747. Minus 1, okay, divided by 6%, which is the effective rate. Disregard the negative sign, okay, disregard the negative sign. The present value of an ordinary annuity at 6% for 5 periods is 4.212. Okay? Kuha. So, that is how you compute for your present value factor using a manual calculator. Okay? Now, special notes lang, no, in computing your present value factor. Okay? If the regular payments schedule, example, no, the end periods, okay, in computing for your effective present value factor, okay, will be affected by your regular payment schedule and also the effective rate to be used. Meaning, okay, example lang, the interest payment is not annual but rather semi-annual or semi-annual. Number 1, the effective rate or the rate na gagamitin natin in computing the present value factor is not 6% because yun nga, 6% that is per annum. We have to convert that into its semi-annual value. So the semi-annual value of that kung annual to, obviously that is 3%. While, because semi-annual tayo, okay, and if the term is 5 years, yung regular schedule is not 5 periods. Kumbaga, merong cash flow na hindi for 5 installments lang or 5 periods, but rather, there are 10. No? Because yung nga, semi-annual. In a year, twice yung outflow. Okay? So, the end periods na gagamitin is not 5, but rather 10. Okay? If we are to compute for the present value factor. Okay? If quarterly, because in a year, there are 4 payments, 4 schedule, hindi siya 6, but rather 1.5% yung effective yung rate na gagamitin. And the period is not 10, but rather 20. Kasi nga, 5 years yung term, then there are 4 payments in a year, so yung period is 20. Okay? So you have to be familiar with that, ha? Kasi sometimes, yun nga, dyan tayo inaatake ng problem, no? Minsan, hindi natin, or nakakaligtaan natin na semi-annual pala, then we are still using the annual rate and the original period. Which is, mali talaga yung magiging present value factor mo kasi yun nga, we have to convert it into its schedule. We have to convert it per regular schedule. Okay? So, again, we will encounter such problem later on during our exercises, no? But you have to be familiar with that. Okay? We have to be familiar with that. Okay. So, yun. Okay? So, I'll have to cut this video muna kasi medyo mahaba na siya. Okay? So, we will continue the discussion. We will now go with the formal accounting for bonds. Okay? Formal accounting for bonds. Okay? In the next video. So, I'll have to cut this first kasi medyo mahaba na. Okay? So, see you in the next video. Okay?